Elon Musk, a name that brings to mind electric cars, space rockets, and billions of dollars. Since the last US election, Musk has added a mind-boggling $50 billion to his wealth. I mean, who hasn't? But how did he do it? Was it the stock market, savvy moves, or just pure luck? Spoiler alert, it's mostly Musk being Musk. In today's video, we're unraveling the chaotic genius behind how Elon Musk made $50 billion in less than a year. Let's dive in and try not to feel too bad about our own life choices. To understand how Musk managed this incredible leap in wealth, let's first look at the challenges and the risks that stood in his way. After the election, the stock market was uncertain. Rising interest rates, inflation, and global market turbulence made things unpredictable. Just the usual end-of-the-world vibes. On top of that, Tesla's valuation was being questioned by experts. Was Tesla really worth over $1 trillion? Or was it just a bubble ready to burst? Hint, the answer depends on which expert you ask and what day it is. And of course, there's Elon himself. In the past, his tweets and bold moves have sent shockwaves through the financial markets. There were many who doubted whether Musk could keep delivering growth amid such volatility. But instead of backing down, he doubled down. Because why play it safe when you can bet the entire farm and then some? Musk's approach was simple: execute on his long-term vision and ignore the noise. And by noise, we mean everything, including conventional wisdom and sometimes even basic common sense. He focused on three key areas that propelled his fortune to new heights. First, Tesla's massive expansion into new factories, like Giga Berlin and Giga Texas. Because why build one huge factory when you can build two at the same time? These new factories increased production capacity dramatically. Even as supply chain issues threatened to slow growth, Musk used Tesla's innovative approach to manufacturing to stay ahead of competitors. Translation: he refused to sleep until things got done. Tesla's expansion wasn't without its fair share of challenges, though. Remember the supply chain nightmare that seemed to be the theme of the year? Yeah, that didn't magically skip over Tesla. But Musk, being the relentless problem solver he is, found ways to mitigate the impact. From working directly with suppliers to creating in-house solutions, Musk showed that sometimes the best way to solve a problem is to throw enough brainpower and stubbornness at it until it cracks. Giga Berlin and Giga Texas weren't just about making more cars. They were about showing the world that Elon Musk wasn't going to be slowed down by a few missing semiconductors. Second, Tesla's energy business played a critical role. The lesser-known side of Musk's empire is Tesla Energy, which deals with solar roofs and energy storage solutions. It's the part of Tesla that makes you feel like you're saving the planet without having to drive a spaceship on wheels. These areas experienced a surge in demand as consumers and companies sought sustainable energy sources. Elon Musk's strategic investments in energy not only diversified Tesla's income, but also brought in billions in revenue that most people didn't even notice. It's like finding money in the couch cushions, except the cushions are made of solar panels. The energy business is often overlooked, but it's one of the more fascinating parts of Musk's strategy. While everyone else was focused on cars and rockets, Musk quietly built up Tesla's energy division into a force to be reckoned with. Solar panels, power walls, and utility-scale batteries became the unsung heroes of Musk's empire. And when the world started freaking out about energy prices and sustainability, guess who was already sitting on a pile of energy solutions? That's right, our friend Elon. This wasn't just a side project. It was a long-term bet that paid off big when the world decided it was finally time to take renewable energy seriously. Third, and perhaps most controversially, Musk made headlines with his unconventional tactics. His flirtation with cryptocurrencies like Doge Coin, as well as his high-profile acquisition of Twitter, grabbed the world's attention. I mean, who else buys a social media company for fun? But beyond the headlines, Musk's actions had financial ripple effects. For example, his influence on social media and his strategic stock sales allowed him to capitalize on Tesla's volatile stock price, adding billions to his personal wealth while ensuring Tesla remained well funded. It's like playing chess while everyone else is trying to figure out checkers. The Twitter acquisition wasn't just about owning a platform, it was about influence. Imagine having a megaphone that reaches hundreds of millions of people at the touch of a button. Musk didn't just see Twitter as a social media company, he saw it as a tool. And sure, there was a lot of chaos involved, but chaos seems to be Musk's natural habitat. By controlling the narrative, Musk was able to sway public opinion, push cryptocurrencies, and keep Tesla constantly in the headlines. And let's not forget the cryptocurrency roller coaster. His tweets about Doge Coin and Bitcoin were enough to send prices soaring or crashing. Who needs a marketing budget when you can just tweet? All these factors led to one outcome: a skyrocketing Tesla stock price. Despite market uncertainty, Musk's confidence in Tesla's long-term growth, his ability to adapt to changing economic environments, and his talent for staying in the spotlight all contributed to a perfect storm, one that saw his net worth grow by $50 billion. Not bad for a guy who spends half his time tweeting memes, right? And let's not forget Musk's strategic stock sales. Remember when everyone was freaking out because Musk sold a chunk of his Tesla shares? Some thought he was cashing out. Others thought he was losing faith. In reality, it was all part of his master plan. By selling high, Musk was able to bank billions, while the stock was at its peak, then use those funds to fuel his next big ventures. It's almost like he knows what he's doing. Almost. But what was the real turning point? Analysts point to a few key events. The first was the Federal Reserve's policy shift, which boosted investor confidence and led to a rally in tech stocks. Tesla, being one of the most closely watched tech companies, benefited massively. Secondly, Musk's announcement of potential breakthroughs in Tesla's full self-driving FSD technology brought in a fresh wave of optimism, further driving up Tesla's valuation. Because nothing gets investors more excited than the idea of a car driving itself while you take a nap. And it wasn't just about FSD. Musk made it clear that Tesla was more than just a car company. It was a technology company, an energy company, and a data company all rolled into one. He painted a vision of the future where Tesla cars weren't just vehicles. They were nodes in a vast, interconnected energy and transportation network. Investors ate it up, and who can blame them? Musk has a knack for making the future sound like an incredible place, and convincing people that Tesla is the company that's going to take them there. Elon Musk is no ordinary billionaire. His fortune has always been closely tied to the companies he leads and the grand vision he represents. From electric vehicles to space exploration and even social media drama, Musk's ability to make bold bets and challenge conventional thinking has earned him billions, $50 billion to be exact, just since the election. Will he keep this momentum going? Or are we about to see another twist in the roller coaster ride that is Elon Musk's journey? Only time will tell. And with Musk, you never know what kind of ride you're in for. Thanks for watching. If you enjoyed this breakdown of Elon Musk's recent moves, make sure to like, subscribe, and let us know in the comments what you think his next big play will be. Maybe buying another planet? Or perhaps a reality TV show where billionaires compete to colonize Mars. Until next time, stay curious and keep exploring the world of finance and innovation.